Medical laboratories are always on the lookout for healthcare professionals who are willing to give their expert opinion on the latest medical breakthroughs. All Global Circle offers healthcare professionals the opportunity to shape the medical industry by participating in surveys that are relevant to their specialty. Receive $50 of sign-up bonuses and get paid for participating in studies by giving your opinion. Sign up today, impact millions of lives, and go to allglobalcircle.com. Welcome to the Happy Doc, the voice of fulfilled physicians, sharing life stories from physicians, health professionals, and entrepreneurs so that you can live your happy life. All right. Hello, everyone. Welcome to another episode of the Happy Doc. I'm super excited. Every episode, I'm always excited. But today we have Dr. Christopher Loo. Chris, thank you so much for being on.
Hey, Taylor. Thanks for having me on the show. I'm really happy to be here and share my time and experience with everybody.
Awesome. So, Chris, tell us a little bit about yourself. What's your background in medicine?
Yeah, I trained in orthopedic surgery, and after that, I transitioned into full-time entrepreneurship. I can tell you my story later on. You know, it's quite inspirational, and it's quite unique, and it's very entrepreneurial.
Awesome. So this is a little bit different than some of my other episodes. So for those who are watching, and we're going live right now. So if anyone's listening to this episode while we're doing it, feel free to ask questions. And I'll definitely also look at those comments as well. But Chris, tell me more. So you went into ortho. Why medicine in the first place?
Yeah, so I grew up in really humble situations. My parents were first-generation immigrants, and basically my brother and I were encouraged to become medical doctors for economic success and prosperity. At an early age, I was always the outsider, so I developed a very entrepreneurial skill set as a means of survival. So there was a point in time when I was growing up, I experienced a lot of discrimination and bullying. And there was a point when I decided that I would never be dependent upon a job. I would never work for anybody. I wasn't going to work for a corporation. I wasn't going to depend on the government, Social Security. So in order to accomplish that, I had to become an entrepreneur. And so therefore, my entire economic success and freedom would lie solely on me, and I would be 100% responsible. So that led me to pursue a career in medicine at first. And it really wasn't my passion, but it taught me a lot of skill sets that helped me survive and thrive as an entrepreneur post 9/11, post financial crisis, and post COVID. So I went to Baylor for medical school, was part of the MD-PhD program. And that's where my real entrepreneurship startups started. So I started investing in real estate. I bought my first investment property when I was a first-year medical student, rented that out. And by my final year of medical school, I had another investment property, and I was actively investing in stocks and trading in options. So my final year of medical school, I had already attained financial freedom, and I would never need to work for anybody or anyone if I didn't want to. So, but nevertheless, yeah, it was a great story because I was really encouraged by all my mentors and deans to pursue the conventional route. So, I remember going through the list of specialties, and I wasn't really particularly enthusiastic about any of them. So I settled on the highest paying specialties, so ortho was one of them. I matched into Rutgers, and I moved up to New Jersey. And, day one, my intuition told me that I had made the wrong choice. So I toughed it out for 2 years. And then there was this point where my intuition told me to take a leap of faith, or otherwise I would live the rest of my life with regret. So the day that Lehman Brothers filed for bankruptcy, I listened to my intuition. I walked into my chairman's office, turned in my keys, badge, and pager, and I've never looked back since that day. And as they say, the rest is history. So
amazing. Wow. So there's a lot of interesting things you said there, and I really want to kind of tune into that for a second. So a lot of students now, we're not taught about financial freedom. We're not taught about real estate. We're not taught about entrepreneurship. We're not taught about business. And you, in the meantime, not only thought about it, studied it, but practiced it. And I think that's incredibly powerful for many reasons. And so first off, I just have to applaud you, because financial freedom, first off, is something that a lot of us are dreaming about, especially now with the immense amount of loans that people take. How did you start to even begin this discovery of this other world?
So like I allude to, a lot of it was a means of survival. So, I went into medicine because that was, back then, it was the way to achieve financial freedom. My wake up call started on 9/11, because that's when I was a second year medical student. But a lot of my friends, they took jobs right out of college. So they're working in the tech sectors on Wall Street. So a lot of them got let go after that. So I saw them really struggle. So that was my wake up call. So luckily, I was in school, so I had time to prepare and study. And I also saw that healthcare was going down the drain. And I saw that the next 20, 30 years wasn't going to be as fruitful as the prior 20 to 30 years. I also saw, physicians get commoditized. Now we're seeing that it's very prevalent in the era of COVID-19. So I just started to study. I formally incorporated in 2002, and I just started reading, studying the market, studying trends. And for me, it was just a means of survival, because I knew one day I wasn't going to practice medicine, because I saw the quality of life, and it was actually a dying profession. So I just started to seriously just prepare for my financial future.
Yeah. And it's interesting when you talk about this too. Some people go into medicine for passion. Some people go into it for, a variety of reasons. But for you, it really was a means to an end in a sense that you wanted to build out a strong financial future. And I'm sure that kind of motivated you also to maybe look at some other routes, right? Like you chose ortho, not mainly because it was your passion per se, but it was the highest paying one. Now, with all that being said, you reached financial freedom, and financial freedom means something different for maybe some other people. So what's our working definition for financial freedom as you attain that?
So financial freedom can be a lot of things for a lot of people. There's one is, for me, financial freedom means just having the means of creating the income streams without needing to work for somebody or without needing to rely on a job or boss. So that can either be through real estate, it could be through a company, it could be stocks, it could be through savings as well. So it's all a personal decision. It's based on personal finances. So, people that spend a lot will require a lot more income to support that lifestyle. So, like I said, but essentially it's the ability to pursue what you want, do what you want, without needing to depend on an external source of income that is out of your control.
Right. And again, this is something that is not in part of formal education, probably because if you were to learn about it, you might not want to work within the system anymore, right? So let's kind of dig into, obviously, I know this is an area that you're very passionate about, but let's start dig into some of those pathways towards financial freedom. Like what was your path, and what are some pathways that you like to talk to people about?
Yeah. So I got my financial freedom through real estate, and then through stocks and options. Right now, my financial freedom is through my consulting company and through my digital content creation business. So doing these sort of podcasts. So I got educated through real estate and stocks. It's not really what I would want to be doing 40 to 50 years from now. It just taught me the basic skills and how to survive as an entrepreneurship, how to become a better investor, how to learn to spot value in opportunities, how to create those. So there's a lot of different ways in information age. So a lot of times, stocks and options and real estate, those take a little bit more experience and education and training. But, with the internet, with podcasts and books and just social media, there's so many low cost, low entry ways and high margin and low overhead ways of creating passive income.
Yeah, absolutely. And I'm seeing that for myself as well. Like, just with this podcast, I went from, doing this for something for fun. And now, like, after a while and gaining an audience, right, you can get advertisements and those types of things. So this podcast actually has some ads on it as well. And so I started to develop a little bit of an income stream through that. So when you're teaching people from the beginning how they might start to think about this or what resources to look at, what sort of things do you like to tell people who are just getting started?
So the first thing is just start getting educated. I recommend the number one book that you can buy a book for $10 and it can change your life. So that book came to me through Rich Dad Poor Dad. Less than $10 and it changed the entire course of my life. Wow. So just start reading and educating. Another great book is Multiple Streams of Income. So that teaches you in today's age, the way it means of protecting your job security is to be able to create your own streams of income. Other books, for example, really getting started in options just really amplified my success in the stock market. But like I said, these days everything is going towards digital. So there's hundreds, thousands of podcasts. There's YouTube. A lot of it's just free. So start educating yourself. After that, it's sort of you can invest with online courses. So those are fairly inexpensive. They take those are a little bit above the level of free podcasts and books. Above that is go networking with conferences, seeking mentors. The number one thing is to really accelerate your success is mentorship, because you have to have, it's like a guide. It's like if you're going to hike to the summit of Mount Everest, you're not going to do it alone. You have to have somebody there. And especially with the information age, where knowledge and information is just free and abundant, it's not going to help you just to have so much knowledge. You have to have somebody that can help you dissect that knowledge, how to apply it, how to effectively guide you, and how to use that knowledge. So
yeah, absolutely. And you provided a really good stepwise pathway there. I'm curious, you said that you made a powerful statement. You said Rich Dad, Poor Dad. That was the book?
Mm-hmm. Yes.
What was it in that book that you're like, oh my gosh? Because I have a book of my own that happened to me as well. But wow. What for you, Rich Dad, Poor Dad was a very powerful book. What was it in that story, or what was the moment that you're like, oh my gosh, I have to do this?
He talks about the 4 quadrants: the employee, the self-employed. So those are the 2 where you're trading your time for your money. And then he talks about the 2 quadrants where you become a business owner and an investor. So that's the fast track. So that's when you have enough passive income where you free up your time. You're not dependent upon a job or a boss. And that's when you can really accelerate your progress. But the one of the stories was where I realized, we all go into these high paying professions, and we're getting paid $500 per hour, but really it's not financial freedom, because you can get terminated by your boss, you can get terminated by the insurance company, etc. So you're still trading your time for your money. So in order to get away from that paradigm, you have to start thinking in terms of assets and creating assets. So that's whether that's through books, or whether it's through digital assets, whether it's through real estate, whether it's through paper assets, partnerships. So that was the one key idea that I got from him. And really it's learning to leverage your time and your skill set and working smarter versus working harder.
Right. The trading time for money concept, I feel like people don't think about that a lot. I'm aware of the 4 quadrants, and a lot of people, I think, mix up owning a business that is actually making you money versus being your own being an employee. So, right, you can own your own business, mm-hmm. but you're still an employee of that business. And mm-hmm. so you're not, again, I'm preaching the choir here. I know you know this, mm-hmm. but, a lot of people, I think, that's a difficult sort of concept if they've never owned a business, right? Because what you're saying, and I think is a very valuable point, is when you make assets like a book, like a course, like a podcast, whatever it is that you're doing, you're able to sort of have reoccurring revenue over time, right? So tell me more about, for you, once you read this book, once you started educating yourself, what were those assets that you started to build for yourself? And now in 2020, what do you see as like some of those high value assets that you're trying to create for yourself?
Yeah. So when I read that book, it was back in 2002. And back then, so this was before the age of social media, and before the advent of Google and Facebook. So I started to just really look at the traditional forms of generating wealth. How did the super wealthy get that way? So that was I read hundreds of autobiographies, and it came down to two things. One was real estate. So every wealthy person had a component of real estate in their portfolio. There was just, whether for tax advantages, whether it was for wealth creation, whether it's for asset protection, real estate was there. So that's why I started looking at that. And I started to look at real estate in terms of how to generate additional cash flow so that I could have that regularly occurring income. The other side, the flip side to that coin was a lot of extremely wealthy individuals became wealthy through the stock market. So whether that was through Wall Street or through investments, such as, including Warren Buffett. So I started to really dissect their psychology and how they started to analyze the markets. What was their psychology of investing? What was the difference between investing and trading? And so that's why I really, developed my own personal preferences, how I like to invest in paper assets, and that led me to learning how to trade options. And the thing about options was not only could you trade it for gains, but you could also use options as a in your portfolio as a means of protection. So in case, any sort of significant downturn, there's the existence of put options. So you can buy put options, and it's almost like an insurance policy against your portfolio. So that's how I did it first. And then from 2008 to 2016, all I did was I implemented my success back from medical school. I just bought single family condos, and I just did the BRRRR method. I did the house hacking method. And then when Airbnb came on the scene, I used Airbnb. And that was up to 2016. That's when I achieved FIRE status. After 2016, I started to see a shift in the dynamics. So things were changing in every single sense of the word because of globalization, technology, and a lot of different market forces. So that's when I started to shift towards the internet, online courses. I wrote my first 4 books in 2017, 2018. A lot of coaching, and then podcasts now are on the scene, YouTube. So that's why I started to focus on those, because those were those are the high margin assets, but they don't take a lot of capital. Like, for example, real estate, you have to have, at least $100,000-$200,000, to get in and, be competitive. With a stock portfolio, you have to have, a significant amount. So, but the internet is, really low barriers of entry. Anybody could be successful. It was really the wild west. And so so right now I'm just focused more on the high margin online channels of monetization.
Yeah, it's funny you say that, because I sort of did it intuitively, I guess. But look, I'm a poor resident and I have hundreds of thousands of dollars of debt, right? So for me specifically, as you're saying that, I had to look at the lowest hanging fruit, right? And one of the things that I could do personally was start to create that digital presence. I'm curious, if you were to start today, let's say you destroyed all your assets, let's say you lost everything. What would you focus your time and energy on?
I would focus on the stock market. So that's one thing. The other thing is just developing your social media presence. So through Instagram, YouTube, Twitter. I've had a lot of success through Facebook groups. then the other thing is right now that I've divested, I started divesting since 2010, and that's in digital currencies. Again, it's a very speculative and it's a very hyped up play, but I got in early. So, but like I said, exercise caution. But I think it's one of the areas to be looking into is just like digital currencies. Because interest rates are at an all-time low. The Fed can print trillions at in just a hit of a button. So really, I think the dollar is really under attack, and also with China. So I think in terms of the dollar status as the reserve currency, it's going to be threatened. And I think digital currencies has a lot of advantages. So look into that.
Yeah. So basically the fact that everything's kind of in flux right now, the digital currency is more of a stabilizing. It's more stabilized in terms of the fact that, the way that crypto works is they can't print more, right? So it's stabilized in that way. That makes sense. I think now one of the things you mentioned earlier is with your story, real estate was huge, right? And real estate's been something that's been a part of what you did. You even mentioned buying the condominium and getting the rental properties and all those things, and then Airbnb as well. Are you, for 2020, like, do you think, for me, and again, I'm asking this to you in a selfish way almost. Do you think that it's worth still having investments or putting money towards physical assets like real estate, or are you more cautious right now?
I'm glad you asked that question. So I think as physicians, as high income earners, I think real estate has a really fantastic component. One, for asset protection, and two, for tax advantages. Because for high income professionals, the tax rate is extremely high. So having real estate as an investment is actually a hedge against your tax liability. That being said, and also the other thing is that interest rates are at all-time low, so it's easy to refinance a place. It's easy to, if you qualify for a mortgage or a loan, you can get great rates. And then, but the thing is, the flip side to that is, asset prices in some areas are overvalued. Sometimes a lot of it's in a bubble. With the COVID issue and a lot of tenants not being able to pay their rent because they can't, they don't have a job, and then with the state laws protecting tenants, there's a lot of risk and liability for landlords. So that in that sense, it's very unstable. So I mean, if you're going to buy a house, for your own personal use, or if within reason, or if you're going to buy like a small investment property, because interest rates are low and you have some extra money to invest in, do that. But again, you have to hedge it. So like I said, in 2016, I started to see, all of these different changes. So that's why my last property I bought in 2018, but now I'm just looking and studying the market. And, also with, like, for example, with all of this digitalization and virtualization where companies may not need commercial real estate anymore. So that's going to be another issue that I'm looking into. So but that's a great question.
Well, I'm just, because again, the way that you started before, right, is not like, as the market's always changing, and what's valuable in, you were mentioning 2002 and stuff, like what's valuable 20 years ago is not necessarily what's valuable now. And so I think that's one of the tricky things that's hard for people to understand who are getting started with finances, is that the patterns that worked before aren't the patterns that work today. And so you really do have to consistently study and watch where things are going. And that's why I also appreciate, like, you're giving very good answers here. I appreciate the fact that you gave a reasonable answer, which is you can go into real estate, but you have to also understand the current market, which is, there's tenants that can't pay. There's instability there. Yeah. So there's a lot of things that are kind of happening in the background. One thing you mentioned earlier that I don't know a lot about that I did want to ask you is, I'm familiar with stocks. I'm familiar with, like, investing in index funds and those types of things. But you mentioned options, and I don't know much about options, and I know they're a little bit more of riskier bet, so to speak. Can you tell us a little bit more about what options are?
Yeah, sure. So options is sort of another means. It's sort of like it's a way of means of controlling the paper asset. So for example, I'll give you the two types of options. So you have a call option and a put option. So you have a call option basically gives you it's a contract. So it gives you the right to buy X number of shares at a certain date in the future at a certain price. And so what that means basically is that, for example, if you think a stock is going to appreciate a month now, 2 months from now, but you're not sure, right? So instead of buying the stock outright, let's say the stock is like $100, right? And each call contract is 100 shares. So if you were to own that stock outright today at $100, that would be what was that? That'd be $10,000, right? Yeah. On the flip side, what you could do is you could, let's say you think that stock is going to appreciate, a month or two from now. So what you could do is you could buy one call contract, and that call contract gives you the right to buy those 100 shares at the end of that 2 months. So in that case, one call contract is usually, let's say, could be like $10, $100. It depends on the particular stock. So you're controlling 100 shares of stock for really significantly less price. So, and let's say at the end of that period, the stock appreciates. You can either exercise that contract to own that stock, or you can just sell the call contract and reap your profit. So you can do that way. The other thing is, for example, with call options, let's say you have 100 shares of Microsoft, right? You can rent out that stock each month based on by selling a call contract. So that basically gives you the right to sell those particular shares at a certain date at a certain price. So it gives you a lot of options and variability. So I'll give you another example. So for example, like a put contract. So if you think let's say for example, you started to see investors became wary back in January, February of this year when, with COVID or something. So what they would usually do was they would, you could buy put contracts on either the Dow or, your stock portfolio. And, because the market dropped, 30%, 40% in some cases, you could reap that. The losses on your portfolio could be offset by the gains in that put contract. So there's a lot of different ways of doing things.
I might be oversimplifying it, but is a call option when you believe it's going to appreciate, and a put option is more when you're trying to short?
Yes. Yeah, exactly.
Okay.
Yeah.
Okay. Gotcha. So okay. And from my understanding though, this is you're predicting like short periods of time. Like you're imagining it's going to improve in 2 months versus it's going to short or reduce in 2 months, right? Like the options are riskier in the fact that you're predicting within a short period of time, correct?
Yeah, exactly. So that's why so you have you have weekly contracts. You also have monthly contracts. You have quarterly contracts, yearly contracts. So and again, they're a lot more volatile. So like for example, like a single drop in the 1 point in a drop in a stock price, you may lose 100 on a stock, but for an option you may lose like 1,000. So it's a lot more riskier and a lot more volatile. That's why it's you have to really learn what you're looking for and how to use options in your to accomplish your goals.
Right. Yeah. So it's definitely for someone who's casually investing and who isn't doing the research and who doesn't know the company, options are probably not a good idea.
No, no. For that sort of person, what I would recommend is just $100, $200 every month into a low cost index fund and just set it there over 10-year, 20 period, 10-year, 20-year period. It'll appreciate That's all right. But if you don't know what the company or anything, I do not recommend options. You really have to know the market, what's going on, because things change. It almost now. I've seen it when I was doing options back in 2006. I could, the options would be good for like a month, sometimes more. These times, I'm only looking at weekly options because things change so quickly. So,
yeah, they certainly do, and you don't know what's going to hit next. So I know there's a lot of people again that are listening to this that are nowhere near financial independence, and they just want to get started. You mentioned one of the ways to do that is with books, and you mentioned a few books. So I have a few questions. One is, what books would you recommend someone read today, even if it's just broad topics? Like, what are a couple books that you love that you're like go to
for finance? You mean, or
just,
like I said, any of the Robert Kiyosaki books? Those are my go to. Multiple streams of income. Those are I've written 4 books as well. You can check them out. But anything with personal development. So I'm always reading about the really super high earners, but also the ones that are the most happiest and the most fulfilled. I'll give you an example like Oprah Winfrey, or Tony Robbins, Steve Jobs, Warren Buffett, Richard Branson. These are the people that I'll read any of those books. And just, but really, I think if you read Rich Dad Poor Dad, all of his books, if you read Multiple Streams of Income, that's enough. That'll change the course of your life. If you're looking at others, there's The Millionaire Mind by T. Harv Eker, which talks about just people with regular 9-to-5s that become millionaires, become financially free, financially successful. So any of those as well.
Awesome. And then, so those are some books. What are some courses that either you would recommend, or B, you wish you'd known about sooner?
Well, I've done a lot of courses. And I've always invested in my own personal education. I've taken Tony Robbins, his Date with Destiny, because that really helps solidify my values and beliefs, and really aligning my core values and beliefs in living life according to how I wanted to live it, not really what society was telling me or my parents. Those are really expensive. So the others are any sort of I'll actually give a tout, because I took Kenji Asakura's and Leticia Alto's real estate course, and that one I took last year, and that was more just to study more successful investors and see what different tactics and strategies that they were using, and more to network. But any physician that's looking to go into real estate should go into that course, because it's really talking about really cash flow and really fundamentals, and it's not really talking about gambling on appreciation or flipping. It's a little bit it's a little bit dry, but the concepts are very powerful and valuable. So if you take those concepts, you can do very well. I've done those. I've done so many courses, but really the life-changing ones were the live events. So that
Well, I mean, live event. I mean, like the Date with Destiny one. I've actually really wanted to do that one, because I think Tony Robbins is just so inspirational, and I think that's a great foundational sort of thing too, because I think a lot of people want to make more money, but as you know, and we could have had a whole conversation about this, mindset is 100% so important before you even enter these kind of conversations, because if your belief system isn't right, if your mindset's not ready for it, it can definitely impact you as well. But money can be, it doesn't matter if money's dry or money's entertaining. At the end of the day, you have to learn this stuff. So I appreciate that. And one thing I want to let the listeners know is for the podcast is we're going to have all the links for the courses and the books and all that stuff. I want people to check it out. And also I'm going to offer Christopher all of your books as well in our notes, because I want people to have those resources, because again, you're not going to learn about I mean, I'm preaching to the choir here. You're not going to learn everything about finances and what to do within a 30-minute, 40-minute podcast episode. It's just not possible. So I appreciate you offering those resources. Now, I've asked you a lot of questions, but one question I ask everyone is, or one of the questions I love to ask is there anything you wish someone would have just told you sooner? Or was there anything that you wish that, if you're, a teenager, 20 years old, you're thinking about going into medicine. Is there something you just wish that someone had knocked your head and said, this is what you need to do? Like, what would that be?
Well, I really wish that, I think being pushed into medicine at an early age kept me just focused and on track. It kind of made me lose sight of the big picture, though. So, but I think, looking back, 20, 30 years later, it was actually a good thing for me because it kept me out of trouble. And then it allowed me, being a physician, and it actually gives you a lot of credibility and a lot of influence. Whereas if I didn't go to medical school, I probably wouldn't be as effective. But really, I think back then I wish somebody would just have said, you don't have to really, all of the industrial age ideas where you go to school, get good grades, listen to authority, do what people say, stick to the well beaten path. Really, I wish somebody would have just said, it's okay to be different and just go out on your own and just, pursue your passions. And, life is not like a straight, path where you just, it's not a linear path, it goes through ups and downs, and that's life, so, but I think the medical profession really doesn't really exemplify real life in terms of just career advancement, because everything is just an orderly stepping stone, but that doesn't really happen in real life. So
yeah, it's very true. Yeah. So I've asked you a lot of questions during this conversation. Is there anything that you wanted to say that maybe I haven't asked you yet?
So go into pursue what you want to do, and really don't live life with regret. Don't leave everything on the table. So don't go into something where you just feel like you have to because it pays the bills, or because if it brings in $1 million a year and you think that's going to make you happy. Really do things that are really aligned with your values, interests, and passions, because in this day and age, the way things change so quickly, industries are wiped out in a matter of, sometimes months, so really do things that really excite you and interest you, and, that you can excel at.
Yeah, absolutely. I mean, that's definitely been something that's very, very true in my life. And what you said there with the volatility of everything going on right now is exactly the reason we need to be listening to you, because having all these different streams of income, diversifying yourself helps protect you, right, from all of that volatility. Now I'm going to open this up. I see that we have a question here from the live stream here. So I'm just going to throw this up here. And if anyone has any questions at this point, please let us know. Otherwise, we'll be closing out for today. I don't want to waste too much of Dr. Chris's time here. But we have a comment here from Francis Yu. And he says, and I think you can see it on the screen here. He asks, thoughts, and again, I don't know what this is. So if this is something bad, let me take this off. Yeah. Thoughts on naked calls and puts. I don't know what that means.
So to just give the listeners an idea, basically naked calls and puts basically means that you're able to sell a call or a put option without having the underlying with guarantee. So in other words, it's basically in layman's terms, if you were to short Tesla and it's going to pop through the roof. So your loss is potentially unlimited. So that's sort of what the idea of naked means. It basically means you don't have the funds to cover that call and put option. But when you sell a call and a put option, you collect that premium. And so hopefully at a later date, you're able, things work out in your favor. But that sort of investment is very risky. So for anybody that hasn't done options, I don't recommend that. I recommend that you just, stick with just regular index fund investing. Start reading about calls in options and puts. You can buy one call option, put option just to see. It's not going to break the bank, but if you're going to do like naked calls and puts, those can really seriously jeopardize your financial security. So I don't recommend that. That's really for advanced investors and traders.
Okay, so not something for someone like me who is just learning what options are.
That's my caveat. Just I'm trying to protect the listeners. Don't do anything like crazy or wild or speculative.
So I'm not gonna do a naked call on Tesla with my entire paycheck tomorrow.
Yeah, don't. I would not. So.
Gotcha. Okay. So I think that's the only question we have. If there's any other questions or comments, feel free to put them up right now. Otherwise, Dr. Christopher Loo, I want to appreciate your time today. Finance is a very interesting topic, and maybe at some other point, if people have more questions, I'd love to welcome you back on, but I really appreciated your time. Again, finances is just such an important topic. And if you have any additional thoughts or you want to talk about anything else on the Happy Doc podcast, I'd love to have you on again. So thank you so much for your time, and I appreciate it.
Awesome. Thanks, Taylor. I really appreciate our time together.
All right. And take care.
Take care.
And that's the episode for today. I want to thank you so much for listening to the Happy Doc podcast. Again, this is a podcast that is going to inspire you as a physician, as a health professional, as an individual to be fulfilled in your life. So please look out for the other episodes in the Happy Doc. If you enjoyed today's episode, please leave a 5-star review on the podcasting application of your choice. You can also reach out to us by emailing thehappydoc1@gmail.com. I'll see you on the next episode.